Hi everyone, Connor from Zenphoenix here, back with a monthly analysis for July. This time I'm going to be going over the gold market and I'm going to be giving a rundown of what is coming up on the fundamentals side with special reference to a very important event coming up on Friday. Then I'm going to move on to the chart and tie it all in with the key levels to look out for. And at the time of recording this video, gold is hovering at around $1,750 per ounce and is looking for some more downside. Okay, let's have a look at the fundamentals and try and explain why the market has been in this range for, I would say, about 12 days now. And the reason for this is the confusion around Federal Reserve policy. Now, the confusion remains almost 2 weeks after that sudden hawkish turn in the latest policy decision, which really spooked investors. Now, some Fed officials have stuck to the hawkish tone. It would be nicer if they all did. For example, Federal Bank of Richmond President Thomas Barkin. He said that the central bank has made substantial further progress towards its inflation goal to begin asset tapering. Others haven't given a clear message like that and haven't been as supportive, and this is where the confusion's coming from. Now, as always with gold, it's important to talk about inflation, it's important to talk about the US dollar, and due to reasons I've just spoken about, the dollar rally seems to be back on track for now, and this is really putting pressure on gold as well. How long will this last? Well, I think it could last for July at least, which is the purpose of this video, of course. So from that, I would expect some more downside in gold. However, this will depend on the policy talk coming from the Federal Reserve this month. If they emphasise their hawkish message, then expect some more downside. They're likely to react to the non-farm payroll numbers that we're going to see on Friday, because a strong numbers report will mean the economic recovery is still well on track, and any hint that monetary policy will be tightened earlier than expected can be considered hawkish in my opinion, and it's just really important to listen to those conferences that are going on throughout July. Okay, so on the chart now, and looking at this really ugly downside really for gold since that hawkish message from the Federal Reserve. Anyone who got in off the back of that hawkish message, well, I mean, you can pretty much be holding your trade without any drawdown really at the moment. We do have a bit of an inefficiency in here, I'd say. But yeah, the rundown all the way from around 1900, and as you can see, at the time of recording this video, we have broke out of this mini consolidation period. You can see how we've just, because I'm on the daily chart, you can see how we've literally just bounced off of the 100-day moving average. We've traded well below the 200-day moving average and the 50-day moving average. So for me, this downside in gold looks like it's going to be here to stay for the moment. Now, I've just marked for any gold balls out there. If you are looking to buy gold in July, then take profit levels really would have to be where you see this long-term trend line coming into play now. Probably around 1960, I would say would be a sensible take profit. However, what I can see more likely is we're going to get a fall down into, I think, around 1720, 1715 dollars per ounce, and from there is where I think maybe the bulls might start stepping in. So this is a 4-hour daily order block, sorry, and the reason it is that because we broke this structure high here, which I'll just mark for you. So we've had a run up and we've broken this structure high. What I like about this level as well, it's where we created that really nice and clean double bottom. Buying opportunities from here were great really. I mean, it run all the way up to around 1920. Now if we can get a fall down into this level, then I'm going to be looking to buy the market, and my realistic take profit would be where we have this inefficiency gap in here, which I'll mark for you as well. FVG, fair value gap, so it's where the market is imbalanced. It does have to come back and fill this at some point, and so this would be my realistic take profit level if I was buying from there. Now, in terms of getting any selling opportunities, you can see that where we've had this consolidation, this was the best that gold could rally, which I mean says it all about how this market is at the moment, and the feeling and the mood in the market. But once we get a close, which I think nearly did, if today's trading session closes below this structure low, and I'll delete this one so it's not confusing for you, below this structure low, then we could use this level around 1770 as a potential selling opportunity. So something that would look a little bit like this, and a bounce into our level here, and then we want to potentially buy the market. Now, which is possible, if this hawkish message continues, and we continue to see dollar strength, and we continue to see this pressure on commodities as a whole, we might get a situation where the market actually closes below this level, which is possible, very possible. From there, I'll be looking at a level back where we had this double bottom to potentially sell from, and aim for something around 1625. Has a long way to go to fall that low. You can see that obviously the long-term trend of gold is obviously bullish, so I am expecting a reaction at some point, and I am expecting the bulls to step in at some point. And I think it may be around where this order block and where this double bottom is. So I think there's some more short-term pain to come, but potential opportunities to buy the market maybe in the middle of July or something like that. Let's see how NFP comes out and how the Federal Reserve react to those job numbers. So that's it for today, guys, for gold. I hope you've all enjoyed this video. We always provide a gold forecast for you once every couple of weeks, so I'm going to provide an update on this gold forecast for you to see where we are. If you could please like and subscribe to this channel, it really does help boost our channel. We're appreciating all the comments as well, and we do reply to all of them. So yeah, that's it for today, guys. I'll catch you all for the next video.